Hey everyone, welcome back. We need to talk about silver. And I mean, we really need to talk. There's an emergency alert flashing in the silver market, and it's something the mainstream financial news isn't talking about. While your screens in the West are showing silver hovering around $72, the real market, the physical market, just made a massive move without asking for permission. In Shanghai, the price just printed $78.49. That's a staggering 8.12% jump in a single trading session. This isn't just a blip, this is a signal of extreme system stress. What's happening right now is unprecedented. In just one day, 17.7 metric tons of physical silver were withdrawn from the Shanghai Futures Exchange vaults. Let me repeat that, 17.7 metric tons. That's a massive amount of physical metal being pulled out, confirming a wave of panic demand. The premiums for silver in China are exploding, reaching as high as $7 to $8 per ounce over the Western spot price. This isn't just normal market volatility, this is the sound of the system breaking. For years, we've talked about the paper market versus the physical market. We've talked about how the Comex and the LBMA use derivatives to control the price of precious metals. But what we're seeing now is the breakdown of that control. The arbitrage bridge, the mechanism that's supposed to keep global prices in line, is collapsing right before our eyes. Normally, when a price difference like this appears between two major markets, big players like banks and trading houses step in. They buy the cheaper asset in the West, ship it to the East, and sell it for a profit, which closes the price gap. It's a fundamental principle of global markets, but that's not happening. The gap isn't closing, it's widening. And the reason is simple. There isn't enough physical silver available in the West ready to be shipped to satisfy the enormous demand coming from the East. The arbitrage mechanism is mechanically broken. So why is this happening now? We're heading into a period of thin holiday liquidity. Major Western markets are slowing down, which means fewer traders and less volume. In this environment, price gaps don't just appear, they can turn into violent repricing events. A small imbalance can cause a massive shift because there's no one on the other side of the trade to absorb the pressure. Shanghai is taking advantage of this weakness. They are not waiting for London or New York to tell them what silver is worth. They are setting the price themselves based on real physical supply and demand. This 8.12% move in a single trading session is a huge red flag in any commodity market. For something as globally significant as silver, it's a five-alarm fire. It signals that a major player, in this case China, is making a determined move to secure physical supply at any price. This isn't speculative froth, this is real industrial demand. Remember that over half of all silver demand comes from industry. It's essential for solar panels, electric vehicles, 5G technology, and countless other applications. This demand is largely inelastic. That means factories don't stop buying silver just because the price goes from $72 to $78. They need it to build their products. They will pay what they have to pay. And right now, they're paying a huge premium in China. This industrial desperation is fueling the fire and pulling the physical market away from the paper price. What we are witnessing is a potential decoupling of the global silver price. The East is saying the price is here, near $80, while the West is trying to hold it down near $72. This cannot last. The tension in this system is reaching a breaking point. A $10 arbitrage gap is no longer a far-fetched theory, it's a very real near-term risk. What happens when a globally traded commodity has two completely different prices in two different parts of the world? Chaos. It's a complete breakdown of the pricing mechanism that has governed the market for decades. So what should you be watching over the next 24 to 48 hours? There are 5 critical signals. First, keep your eyes glued to the Shanghai silver price. Is it holding these gains or pushing even higher? Second, watch the inventory levels at the Shanghai Futures Exchange. Are we going to see another massive withdrawal of physical metal? Third, monitor the premium. Is that $7 to $8 gap widening or narrowing? Fourth, watch the volume and open interest on the Comex. Are the paper players being forced to cover their short positions? And fifth, look for any emergency announcements from the exchanges or major bullion banks. Silence from them is just as telling as a panicked press release. The situation is developing incredibly fast. The price control mechanism that has suppressed silver for so long is failing, and it's failing spectacularly. The physical market is asserting its dominance, and the price discovery is shifting from west to east. We are on the verge of a historic repricing event in the silver market. The curtain is being pulled back, revealing that the emperor of paper pricing has no clothes. The physical reality is taking over. This isn't a drill. This is what a market dislocation looks like in real time. We will continue to track every development and bring you the latest analysis as the story unfolds. Make sure you're subscribed with notifications on because you do not want to miss what happens next. Thanks for watching.